It's Thursday, May 30th. Welcome to Market Foolery. I'm Chris Hill. Joining me in studio today from Fool.com, Matt Koppenheffer, and from Motley Hidden Gems, Chief Investment Officer Andy Cross. Happy Thursday, guys.
Hey guys, I think my first time with Cop on the show.
That might be so.
Great.
Looking
forward to it.
It was inevitable. It was inevitable at some point. We're going to talk Costco, Berkshire Hathaway, Elon Musk saying some very interesting things about Tesla Motors' plan for the future. But let's start with Costco. Third quarter profit up 19% from a year ago. They had a slight miss on revenue, but it couldn't have been too bad, Andy, because shares of Costco hitting a new all-time high this morning.
What an amazing company. I mean, Matt, I know you follow this. It's just such a great story. I mean, here's the thing that I love about Costco, and there are three things. And I think investors tend to underestimate Costco. One is that it has a unique selling proposition, a culture that's ingrained in that business to deliver a unique selling experience to its members. Two, it sells a product that requires continual repeat purchases, and they do that with that unique value proposition. And then third, it has that beautiful membership business where it has some pricing power, where it can, very carefully and judiciously increase prices on their membership fee, while at the same time trying to keep prices as low as possible on the products they sell. And it's just magic, and it's done very well. The stock always sells at a relatively rich multiple to its peers, but it's well-deserved, and that's why the stock continues to march higher.
It was about a year and a half ago that Jim Sinegal, the longtime CEO of the company, stepped aside. Craig Jelinek took over, and Matt, we've seen CEO transitions more often than not go awry, and this seems like that company just hasn't missed a beat since Jelinek took over.
Still chugging along. Like Andy said, one of the things that's great about Costco is that membership model. I mean, in few other shopping establishments do you have this thing where you essentially have customers paying you to say, "I'm going to give you money so you let me shop at your stores." You talked about the miss on the top line on the sales. Sales growth was about 8% year over year, but those membership fees grew about 12% year over year. And the beautiful thing about that is that the costs associated with those membership fees, that's leverage, that's profit. So you saw a big gain in operating margin because of that. So that's wonderful for investors.
And is that ripple effect now over? Because I think it was, correct me if I'm wrong, but I think the increase in membership fees, I think that was a year ago, or maybe it was over the summer. And so we've seen this play out over the last few quarterly reports where, well, look, the membership fees, because not everyone renews their membership at the exact same time. But if we're not at the end of that nice ripple effect, we're pretty close, aren't we?
Well, yeah, it was about a year or so ago that they started implementing the very careful. It's not like they are jacking prices up on their very loyal members.
It went from $50, like the baseline. They have tiered, but it was from 55 to 50, or from 50 to 55.
It's very incremental, and getting back to my points that I mentioned, the reason they can do this, and it's not like Sam's Club or someone else can't do this. It's just that the shopping experience and the focused kind of merchandising strategy that Jim Sinegal had built into Costco is so valued by their members, many of which are in this building at the Motley Fool, and they're willing to pay a little bit more for that. And they're like, I mean, gosh, that's barely the rate of inflation over time of the rate of my membership. So sign me up. That's great. And you see it in their comp store sales continue to go higher when the rest of the market, I mean, Walmart, Target, all those numbers are just not nearly as impressive.
And that's what we talk about with great companies in general, that they have that pricing power. So, you think about Costco as a low-cost place to shop, but then it's showing off the pricing power in the business, in the brand, via this kind of move.
Yeah, and I think you have a lot of actually very wealthy people. I don't know what the demographics of Costco are, and I'm sure it changes by different company, but there are just like there are a lot of my parents' friends who are retired, and I know they're fairly well off on their retirement, and they love shopping at Costco for the type of bargains they can find, the selection they get, and they're like, great membership fee, a few more bucks. Whoop, here you go.
I have to say that one of the most interesting things to me about Costco is while they do sell everything from household staples to high-end jewelry, et cetera, they really take care to limit their choices. And it's sort of the opposite of an Amazon, where you can go onto Amazon and you have almost unlimited choices, And if you're going into Costco and you want to buy ketchup, you basically have one or two choices, and it's like, nope, that's it.
Yeah, and Mac had just flashed a sign up from the booth, which is small business owners, and it's absolutely true. I mean, like, just a lot of small business owners, like us here at the Motley Fool, like the Motley Fool shops at Costco. It's very important to their business. They also pay higher membership fees for different values and different tiers of membership. So there's that, and then Costco has the ability to kind of raise prices at different rates depending on their customer. But I walked by Costco last night at the mall in outside Silver Spring in Maryland, where I live, and it was packed with families. I mean, kids running around. It was a shopping experience. They loved it. I mean, it was just, compared to Macy's or Target, there's no comparison. Costco was the hot place to be, Mac.
Shares of NV Energy up more than 22% this morning on the news that it is now part of the ever-growing Berkshire Hathaway empire. It's being bought out by MidAmerican Energy, one of the holdings at Berkshire Hathaway, for the tidy sum of $5.6 billion, Matt. And then when you factor in there's some debt associated with this, which I think is another $4.5 billion. So this is not a cheap acquisition. As someone who looks at Berkshire Hathaway closely, do you think this is a good move?
I think it's great. I see a few different things here that we can take away from what, I don't necessarily want to say what Berkshire's done here. It's more what MidAmerican Energy's done here, because this is really Greg Abel executing on growing the MidAmerican empire there. One of the things is I think if we look at the valuation after that acquisition premium is tacked on there, the valuation on NV Energy is okay. It's not terribly expensive, but it's not cheap either. Yeah. But when you look at NV Energy's results, its operating metrics in comparison to a lot of other utilities, I think what you have here is a very well-run utility. And when you look at the base that they're serving, I think you have growing geographies. You've got that Las Vegas base there. I just moved out of Las Vegas not too long ago, and although that's been a challenged economy over the past few years, I think there will be a nice rebound there. That'll be good for NV Energy. For Berkshire Hathaway shareholders, I think one of the interesting things here is you're seeing another Buffett deputy making an acquisition call. So as we look forward to the future of Berkshire Hathaway, and we think about a Berkshire without Buffett, I think one of the really interesting things to note is the number of folks underneath Buffett who he trusts with making a multi-billion-dollar purchase, making the call on a multi-billion-dollar purchase. And I think that bodes well for the future of the entire company.
Is this a situation where Greg Abel can make this call on his own, or does he need the blessing of Warren Buffett and Charlie Munger? I mean, this is not a small amount of money.
Well, this is MidAmerican. This is MidAmerican cash. It's an interesting question.
He gave him a heads up, didn't he? He had to have at least called him on the phone.
I'm guessing that he called him up and he said, "Hey, Warren, I've got NV Energy on the line here, and I'd like to do this deal." I don't think Greg Abel goes out and spends billions and billions of dollars of even MidAmerican money without Buffett's blessing. But I think this is him working in his own capacity in a very large extent.
Do you own shares of Berkshire Hathaway?
I do own shares. We continue to. I mean, it's a favorite of many of the services here at the Motley Fool for so many reasons. The beauty with this acquisition and acquisitions in general, and Tom Gardner and I were talking about this before, is
name dropper.
Well, it's true because Tom was teaching this to a few of us, and it's a cash acquisition, and it's relatively small. I mean, Berkshire's a $250 billion company. This is a $10 billion company. All in.
Yep.
While it is a MidAmerican acquisition, Matt's absolutely right. It's backed by the name Berkshire Hathaway and the balance sheet of Berkshire Hathaway. So it's a beautiful. I mean, it really is. It has so many demographics. The acquisition in Vegas, so many in Nevada, so many good characteristics of the demographics that is going to be attractive to MidAmerican, and it's a great acquisition and a good use of cash when cash is earning nothing.
Yeah, true.
What percentage of the and ballpark this if you'd like to, but what percentage of the Berkshire portfolio is made up of energy companies? Because I know that they've got everything from railroads and energy companies to See's Candy, et cetera. What piece of the pie is energy? And where I'm going with this is, with a company as diversified as Berkshire Hathaway, I'm wondering what it's going to take for that stock to get hit in a significant way. And I'm just wondering, like, if energy makes up 30% of the portfolio and all of a sudden energy stocks start tanking, then maybe that has an adverse ripple effect.
Well, I think you're sort of in that ballpark there. I'd have to look at what it looks like after, pro forma for the NV Energy acquisition. But you're sort of in that ballpark. But I think one of the interesting things about expanding the utility side of the business, in particular, the utility holdings in particular, is Buffett likes this because it is a relatively stable business. It's going to get hit in a recession because power consumption goes down during recessionary times. But, I mean, compared to much more sensitive consumer discretionary businesses, that sort of thing, insurance businesses, which is that's a big part of Berkshire's portfolio. That's a very cyclical business. So, I think by building out the utility business, you've got a more stable base there for Berkshire.
It's a regulated business. You borrow low. Sure. You generate pretty stable returns on that equity. And if you have the balance sheet of Berkshire Hathaway, you can borrow for nothing. You can reinvest it. Carefully raise rates when you're allowed to. I mean, like, it's just, as Matt said, it's a steady business. And I think when you look at the demographics and the opportunity in that space, what cash can earn, Berkshire Hathaway, and it's so large that they have to make pretty significant bets. Mm-hmm. Although, again, $10 billion relative to the market cap is small. But Chris, you started off. It's still a pretty big.
There's still a lot of zeros on that check you're writing.
Yeah, but it's a regulated business. It has very stable returns, and as Matt said, that's the kind of business that Buffett, dreams about.
This week, the Wall Street Journal's All Things Digital conference has been going on in California. Yesterday, we talked about Tim Cook and his comments there. Today, Elon Musk, this was actually on Wednesday, Elon Musk, the CEO at Tesla Motors, said that the company is building more supercharger stations and will triple its coverage area this month. And by year's end, you'll be able to drive your Model S from L.A. to New York City. What do we think of this? I mean, we were talking before we started taping, this seems to me as a positive symbolic move that says to people, oh no, Tesla is serious and growing because now you can drive across the country. But I don't know, are a lot of people going to be looking to roll across the country in their Model S?
Yeah, the Tesla's been in the news, not just its stock, the business and kind of what they've been doing, the innovation, the cars they've been building, that I think Elon Musk is continuing to feel like he has to one-up himself to demonstrate that this is not just a fad and it's not like a DeLorean. Like, this is a real car with a market that is very attractive long-term. We're doing things that no one else is doing, and those things continue to get better and better. So that's why it can justify not just other investors' investment, but Elon Musk's own investment himself, which is quite substantial and getting bigger as he invests more and more into Tesla.
And I'm not dismissing this, but it just seems to me that the symbolism is more important than the actual application. That if you're, whether it's Elon Musk or one of his deputies at the company, and you're in charge of looking at a map of the United States and saying, where do we want to build charging stations? Where do we want to put them? Well, yes, you want to put a bunch in California, and yes, you're going to look at the East Coast and the Mid-Atlantic region so our man Alex Scherer can get from Pennsylvania over the border down here to Fool headquarters every now and then. But I don't know, the cross-country thing.
Well, I did, at the end of last year when I moved to D.C., I did drive from Las Vegas to D.C., and what I was thinking was, I drove my Civic here, but I wish I could have driven my Model S. I think you're right. I think it is symbolic, and I think what they want to do is be able to show that this is the real deal. And so for people, for potential customers looking at this, well, is this a toy? Is this just some, if you have too much money lying around and you want to buy something neato, get a Tesla. I think when they start making moves like this, we're here to stay. This is the real thing. So, I mean, whether or not that turns out to be the case, I think that's the symbolism, and I think you're right, Chris.
Yeah, and it's just allowing Elon to start to build his battery-powered rocket ships to go to Venus as he
exactly.
Thinks about
believe me,
that's really the purpose of this whole exercise.
He did talk about space travel as part. It wasn't all about Tesla Motors. By the way, I don't own a Tesla. I've never been to one of these supercharging stations. Are there snacks there? Are there bathrooms? Like when I stop at a rest stop on the highway, I know that I can put some gas in the tank. I can, get a coffee or something like that. I don't know. Like, are they thinking about these things at Tesla? Because if not, they should be.
Well, I have the same question about like Westport's, natural gas facilities as they build that out. Is it like a TA where you can take a shower and all that kind of stuff?
As a Berkshire Hathaway shareholder, I'm going to suggest that they call up Buffett and get some Dairy Queens and some Orange Julius's hooked up with those charging stations.
Right, and if the car breaks down, call a Berkshire or a Burlington Northern train to come and take you from
hitch a ride.
There you go.
Hitch a ride. Right.
What do you think of this stock? Is it? It just seems out of control. And there are people here at The Fool who own shares, and obviously that's why they've been walking around the office giggling over the last few weeks. But I just look at this, and in part because of this, we're building these supercharging stations. That has to cost some significant amount of money. That's got to hit their bottom line. There's got to be a pullback at some point, doesn't there?
I'm far too boring for a company like this. I stand on the sidelines. I look, I watch. I think it's an interesting story, but it's not the kind of stock that I invest in.
Yeah, I still like the business, and I like the stock. I mean, it's heavily shorted, and that's been a contributing factor here. And then they issued the shares, and Elon came out and said he's sucking up and buying a lot of those shares, and that supported it. There's some very good business momentum behind this story, and it's a buy for us on Stock Advisor, our service, and we still like it.
Andy Cross, Matt Koppenheffer, guys, thanks for being here.
Thanks, Chris.
As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. That's it for this edition of Market Foolery. Our producer is Matt Greer. I'm Chris Hill. Thanks for listening. We'll see you on Monday.